Hello fellow chartists, welcome to my YouTube channel. I am D Chartist, and today in the S&P 500 we had another incredible, very textbook technical analysis, level to level price action. We're going to talk about that, but first check out my Discord. This is my Discord, and I give the plan to the members every morning, okay? And I also do intraday technical analysis throughout the day, okay, for any stock that you want me to cover. But my passion is with the S&P 500. That's what I cover the most. And if you love to trade the S&P 500, the SPY, like me, I definitely recommend joining my Discord. But anyways, here was the plan, pretty straightforward. SPY rallied $40+ since mid-March and finally gave us a pullback after losing the 456 support yesterday. Remember, if you watched my video, talked about that critical support level. That's what triggered the sell-off, by the way. My plan today: bulls managed to recover the 61.8 retracement level at 453.5 to 454 in pre-market. Keep in mind, I posted this at 8:17 a.m. Okay, so SPY was above that level at the time of this posting, okay? That level must hold and clear 456.5, then 458, okay? Those were the upside targets if 454 held as support. If not, okay, gotta cover the bearish scenario, okay? Because it's not about anticipating or predicting, it's about reacting, okay? But anyways, if not, if 454 can't hold, another dip to 450 to 449 zone, then the 200 DMA at 447-ish is in play, okay? So as long as below 454 or 453.5, I was bearish, down to 449 to 450 zone. That was my first price target to the downside. I also wrote around 9:05 a.m. remember to stay bearish unless a resistant level clears. Okay, so I was already entering the market with bearish sentiment because we did not clear any resistant levels. I may take a shot at some calls at the 449 to 450 support zone or the 447 to 447.5 zone. That's the 200 DMA. So I was looking for calls today. For first of all, I'm bearish all the way down to my support zone price target. The first one was 449 to 450, and I wrote right here that is where I'm going to be looking for calls. Okay, so the plan today was pretty straightforward. Under 454, stay bearish until 449 to 450 zone. When we get to that zone, that's when we want to turn bullish because that is support. So what happened with the SPY today? 9:30. The SPY opened at 453.3, back tested the 453.5 level, almost, kind of, right? A little bit. The high of that was 453.46. So 4 cents off of the 453.5 resistant level. Guys, always think of these levels as zones, okay? It's never perfect, all right? So anyway, stay bearish as long as we're below that resistant level. And as we were, and as you can see, price started dropping throughout the morning into the afternoon, and it hit my price zone, my support zone. The orange line right here is 450. This orange line right here is 449. Okay, that was my support zone. So anybody who's confused, remember, my strategy is to go long or buy calls at support, or go short or buy puts at resistance. So I try to give it a zone to make it easier, okay, of where you would look for entry. And if you're still confused, entry is within the zone between 449 to 450. That range, all buyable, okay? If you're buying calls, you want to cut your loss below 449. Okay, pretty straightforward. So anyways, as you can see, it hit my support zone, and from my support zone it jumped. Now this blue line, I didn't mention this in the first plan of the day, but this is 452.5. That was one of my levels, okay, in ETF buy and sell levels, where I was in the chat room where I post all my support and resistance levels. It was right here for the SPY support levels, okay? I wrote it right there. Anyways, so after hitting the support zone, it rallied up until my resistance level up here at 452.5. This is where, you might find this beneficial, but this is where around, where did I write it? Around 2:35 p.m., okay? I wrote it right here. Good spot to take some profits. I was talking about SPY. Okay. Around 2:35 p.m. You can see by this candle right here. This candle. Around 2:30 to 2:45. So I was letting the group know this is where you want to take some profit. Because level to level, guys. And then it dipped. And then as you can see, at the last minute of the day, it just, pretty much squeezed all the shorts out. Okay. Who would have saw this coming? I didn't see it coming. I was just playing level by level. But pretty much, guys, the technical analysis for the Discord worked well, level to level. The levels did their job. Strategies work well. If you followed it, pretty simple. In theory, you guys should have been profitable if you was following the chartist. But I don't know. Okay, all I can do is give you guys the levels and the play. Okay, But anyways, as you can see here, this is the daily chart. Got my fib levels, the blue and orange line, obviously one of my support resistance levels that I was trading today, and we're getting that healthy pullback. Now, obviously, we closed around 452.49. So for next week, for me to be bullish, all right, we seriously need to recapture that 61.8 retracement level. It's at 453.5 to 454 zone. Okay. If we clear 454, that will put higher price targets in play. That will be bullish when we clear a resistant level. Okay? So that will put, I have levels at 456.5, 458. That's a big one over here. And then, of course, for around 459.5 to 460, 462. We still got a lot of levels. All right? SPY has a lot of ceilings that it needs to get through. It needs to break through. Okay? But to keep it simple, 453.5 to 454 is the first zone, all right? As long as it's below the 450 to 449 zone will be the immediate support zone. If that fails, then we can start paying attention to the 200-day moving average. That's this pink line right here. It's currently at 447.4, all right? I may take a shot, as I wrote in the Discord, I may take a stab at some calls there, maybe a scalp play, level to level, or wherever I feel comfortable taking profits, okay? Depending on the price action of the day, gotta be nimble. But I will try it here, and of course, if the 200-day moving average fails, I will gladly cut my loss, all right? Keeping the losses small, easier to recover, all right? If your loss is big, much harder to recover, okay? But pretty much, bulls do not want to see the 200-day moving average fails, okay? If we lose that 200-day moving average, once again, just like early in the year over here when we recaptured the 200-day moving average, failed to hold it, recaptured, failed to hold it, we recaptured. If we fail to hold the 200-day moving average again, it's fair to say it's time to be bearish again, okay, guys? And then we could possibly drop all the way down to the 50-day moving average around 440-ish. Currently, all right, 440.15 cents, all right? So remember what I said. If the 200-day moving average fails, the 50-day moving average is in play. There is some support at 445.3, 50% retracement level, okay? You can scalp some calls or longs there, but I think if we lose the 200-day moving average, selling pressure will be strong enough to take out that support level, and we can see if we get a bounce around the 50-day moving average. Okay, 440 to 441 zone. Give it a zone. That means anything in between is support zone. It's buyable if you're betting to the upside. Okay? So anyways, I hope that made sense, all right? Keep it simple. Above 453.5 to 454, above that zone, bullish. Below, I will be bear bias, all right? Only for the short term, based on the price action. Okay? Now keep in mind, before we get too bearish here, the VIX is trading below all moving averages again. It closed at 1962. Well, actually, the 5-day moving average at 1961. So, technically speaking, it just closed barely above the 5-day moving average. But do note this bearish candle right here, all right? What is this one? This green candle, it opened at 1968, and this closed at 1962. So it's not that impressive, but still, technically speaking, that is a bearish engulfing candle, all right? Kind of a bear. Is that a bearish engulfing candle? I say it is. But all I can say is for sure that the VIX still looks bearish. Okay, for me to be bullish on the VIX, it has to break above the 200-day moving average, currently at 20.73. As you can see, yesterday it lost this on March 28th. Yesterday it back tested it as a resistant, and it was successful, got rejection there. Today back tested that level again, got a stronger rejection there. All right, so the VIX needs to recover 20.73 to look bullish again. Otherwise, the next support is at 17.4. And as long as the VIX continue to look bearish, keep in mind that is bullish for the SPY. All right, guys. Hope that made sense. QQQ. So yesterday it lost the 50% retracement level at 963.4. Today it treated that level as a resistant and was met with selling pressure. It did drop to the low of 358.59. I had support around 357 to 358 zone. Gave it a zone that was based on the 13-day moving average. And it didn't even touch that. So that's still support. 337. Below 337, I'd be more bearish. It puts 352.64 in play. That's a 38.2 retracement level. Now, if QQQ can recover 363.42, recaptures it, meaning it closed back above it, that's very bullish and could put upside targets back in play. I have 371 then 374 as upside targets. Okay, Dow Jones. All right, so it came and tested the 50% retracement level at 346.12. As you can see, that's a nice long wick. So we found some buying pressure there. All right, so as long as 346 continues to hold, I have price targets at 349 to 350 zone. That's both the 5-day moving average and the 200-day moving average. Give it a zone. But if 350 clears, that's a recapture of both those moving average. It puts 351.64 in play. That's a 61.8 retracement level. Obviously, if that clears, very bullish. And the next level would be 359.5. Okay, below 346 equals bearish. If it holds, continue to be bullish. All right, keep it that simple, guys. No need to complicate the trading. No need to. Here's the daily chart of IWM, chopping around the 5-day and the 13-day moving average. Found some support off the 13-day moving average around 206. That's a good sign. And closed at 207.5 today, just under the 5-day moving average at 207.64. So if you see IWM breaking that level, that puts the upside target of 209.74 back in play. And if that clears, 212.5, then 216.3 are the price targets. Okay, now 206 is support. If 206 is lost, 201.3 is back in play. Below that, 197. Well, excuse me. Below that is actually 196 support. All right, and if we close below, if we start closing back below 199.6, you can see from this white trend line, multi-month trend line, below 199.6, that's very bearish. False breakout, okay? So keep that in mind. Apple continuing with the pullback, okay? That's a green candle, but don't let that confuse you. It still closed below the previous day low, all right? So that today was still a down day, all right? So next support is at the 13-day moving average, 170 to 171 zone, okay? Anything between that range is buyable for calls or longs, all right? You got to cut your loss if support fails. But 170 to 171 zone. If 170 fails, we go back and test the resistant line of the bull flag. Okay? This yellow bull flag right there, as you can see. All right? We go back and test the breakout line. We never got a proper retest as support. So now, since, mind you, it's sloping down. Okay? So 167.9 to 1. It's literally at 167.9. Okay, so that's a support level. All right, so 170 to 171 zone support. Below that, 167.9. 167.9 fails. We're in false breakout mode. Okay, guys, false breakout is bearish. Tesla right here. Tesla's kind of flagging. It don't look like a flag, but we did find some resistance. All right, test there, test there, test there. 3 days of test. And it's trading below the 5-day moving average now. Okay, 5-day moving average is at 1,089.5. treated that as a resistant level. So this could be a sign of more downside or more basing, okay, or a pullback. All right, so resistant, critical resistant, well, it's currently at 1,086. All right, so assuming it stays at 1,086 when it opens on Monday, support would be 1,000. Let me see, 1,085. Okay, off this white line right here. Okay, if it stays above 1,085, 1128 is in play. Okay, if it's below 1,085 when it opens on Monday, 1,036.7 is in play. All right, guys, keep it that simple. Above 1,085, bullish. Below it, bearish. Bitcoin came back. It was briefly below the multi-year trend line, as you can see. Came back and tested this triangle pattern, right? Long wick. So that's buying pressure, guys. All right, some good buying pressure, and is also back above the multi-year trend line. So now that this triangle pattern has been back tested as support, bulls do not want to see it get tested again, and from here we need to just go break that 200-day moving average, currently at 48.3K. And if that breaks, 53K is back in play. When will the charts turn bearish on Bitcoin again? If it drops below 44.3K. Keep it that simple. All right, guys. So thank you guys so much for watching. I hope you guys had a great week of trading. Hope you guys have a more than awesome weekend, and I'll see you all soon.